Well, not too far away. Just about, it's still a little bit of a distance. I mean, we're still talking, what, 50 odd points from that new level. Let's see if we indeed hit that mark today. Pawan Parakh from Geojit Financial is with us now. Pawan, good to have you on. So, tell us, I think the narrative that we're seeing increasingly around us now is on earnings, the fact that there is a bit of a slowdown. And that perhaps the first quarter has not been as charitable. Does that concern you at all, or do you think the bulls can continue their forward march?
No, honestly, going into the results season, I must tell you, Q1 is generally a soft season for the entire country for most of the business, except for some seasonal businesses. Q1 is generally a soft quarter. And add to that, we had, elections around. So I think it was widely expected that, Q1 is going to be a soft quarter. I think the bigger worry out here is actually valuations, because we are all aware of the India growth story, and I think more than adequate has been spoken about it. But the fact is that market is just going one way, and I must tell you, valuations are obviously not comfortable across a lot of sectors and stocks. And hence, it's very important to have a margin of safety in the earnings from a full year point of view. Because if you believe that companies are not going to deliver on the full year estimates, then you don't have margin safety. And in case of any big disappointment coming up in Q2 or Q3, I would want to believe that that stock on a relative basis will not work, or on an actual basis also can fall quite a bit. So I think that is the challenge in the market. I think Q1 per se, it was widely expected that it will be a soft quarter.
Pawan, I remember in one of our earlier conversations, you were talking about the EV theme and how you're playing it via auto ancillaries, and you had stocks like Parakh Engineering. And I think there was one more, Endurance. So now you've got this pure play two-wheeler EV, Ola Electric, which is coming into the market. It's, have you looked at the RHP? What are your thoughts on Ola Electric? And is this attractive for retail shareholders?
So without commenting anything specific on the company, I must tell you, I continue to remain very positive on the EV story, and especially in the two-wheeler space. I think two-wheeler and three-wheeler obviously will be the first segment wherein EV is going to make some significant strides. But having said that, I must also tell you that, Ola and Ather have made some very important marks. But a lot of these listed incumbents or the old guys in the market, even, you need to wait and watch as to what their strategy is going to be the next 1 year. So while we think, the EV as a story will do very well, but eventually where will market share settle down for between these players is something a wait or watch for us. And when we don't know, which OEM is going to maintain how much market share, we are better off playing that story through auto anchors. So that is what our strategy continues to be. We continue to play the EV story via auto anchors rather than banking on the OEMs. Secondly, if you look at the commentary what Bajaj Auto's management has given, and even you look at the Ola's number also, obviously they're not making adequate money on their EV venture. So at what level will they break even, and how will the industry pan out? Will they take price hikes to have break even? And at that price hikes, will the demand will be maintained for 1 or 2 or 3 quarters? I mean, these are all a lot of imponderables, and it is better to, and from our point of view, it is better to play it through auto anchors rather than playing it through OEMs.
Okay. So auto ancillaries is a place that you're liking. Pawan, what about consumer? We were just discussing with our colleague Manglam, Colgate's, for instance, very good performance. Some of the other companies are also talking about green shoots in rural, more spending in rural, etc. How are you positioned on that side of the market?
So I think we are also quite positive on the consumer story. I think a lot of the companies in their recent commentaries have highlighted that rural recovery is something that they are witnessing some green shoots out there. I must tell you, after 3-4 years of underperformance, a lot of these stocks, both on the consumer staple side and also on the consumer discretionary side, have become quite, from a valuation point of view, they've become quite palatable. So that is one sector where I would want to be over it at this point in time, because the risk to reward ratio seems to be quite favorable there.
Pawan, in cement, the big are getting bigger, but you're negative on the sector. Why is that?
See, I think, cement earlier we used to play because we used to see that as a proxy to infra. Now that even infrastructure stocks or sectors is doing so very well, most of the companies have delivered themselves. A lot of the companies are talking about, moderation in their working capital requirement. cash flows are looking good, order inflows are looking good. So cement no longer is a proxy play to infra. Okay. As far as the sector is concerned, I think, they are still quite far away from the margins in terms of EBITDA per ton that they used to do in last 3-4 years, but the valuation is sky high. Perhaps the valuation is because of the consolidation that is going in the industry, but from a risk reward perspective, we don't find cement attractive, and the main reason why we used to play cement, I think that is no longer there, because there are a lot of play available on the infra side itself. And I think earlier we used to play only through infra, but now you can also play through industrials, you can play renewables. So the pack itself has become quite wide. So it doesn't make really, I mean, from our point of view, it doesn't really make too much sense to have a lot of position in cement at this point in time.
Okay. So now anything else economy facing, not really cement because of the reasons you mentioned, anything else on the old economy side?
I think power is one theme. The entire sector has done extremely well, but I think we are nowhere closer to the highs. I think we are just less than half mark to the peak. In last 10 years, we've hardly invested into creation of new capacities. And mind you, even if now when we're investing in capacities, all of these capacities will come in next 3, 4, 5, 6 years. Okay. So power is, and if India has to do well, if India's story has to do well, if digital India has to do well, if India overall the economy has to do well, power demand will obviously rise. And I think at least for next 4 or 5 years, there's going to be a big imbalance as far as power demand supply is concerned. And within that, you look at utilities. Despite the run up, I think valuations are still fine. They are just closer to the average valuations of last, say, 10 years or so. And I would want to believe that in the upcycle they would trade at a significant premium to their last 10-year valuations. In fact, something which was very similar to what we've seen in 2003 to 2007 cycle. And I must tell you, there's a lot of power ancillary play also in terms of power generation, power T&D, renewables, industrials. I think that is one pack which looks very, very, very interesting to us. And mind you, again, I mean, this is one sector wherein there's a lot of deleveraging that has happened. And I would want to believe that in next 2-3 years, there will be a couple of pure play green IPPs which will get listed to further widen this space. So this is one sector, I think, from the old economy, as you just highlighted, which is back with a bang. I think this should do extremely well over the next, say, 3, 4, 5 years.
Thank you, Pawan, for joining in. By the way, the market cap of BSE listed companies is now at a record high, crossing $5.5 trillion for the first time ever. Another milestone ticked. Get into a break. On the other side, more on markets.